Do you think your money is safe in the bank? What if I told you that while it sits in your account, banks are using that money to make millions and paying you almost nothing in return? What I'm about to tell you today might change the way you see money forever. Most people work hard, save, and trust the banking system to protect their wealth. But what they don't realize is that banks are playing a completely different game. A game where they always win and you always lose. But don't worry, because in this video, I'm going to show you exactly how to flip the game and make money work for you. I'll reveal alternative investment strategies that banks don't want you to know about, such as investment funds, REITs, passive income, and stocks. If you want to escape the rat race and finally take control of your money, watch until the end, because this might be the information that changes your financial life. Banks are not institutions designed to help you grow financially. They exist to maximize their own profits. But how do they do that? Let's start with a shocking truth. The money you deposit in the bank doesn't just sit there waiting for you to use it. The bank uses it to issue loans to other people and businesses, charging much higher interest rates than what they pay you for keeping your balance there. This happens because of the so-called fractional reserve system. In practice, this means banks can lend out multiple times the amount they actually hold in reserves. In other words, if you deposit $1,000 into your account, the bank can multiply that amount and lend up to $10,000 to other people. And of course, each loan generates interest to the bank, creating a money-making machine without them needing to produce anything. Now, think about this. If the bank takes your money, lends it to someone else, and charges high interest on it, how much should they be paying you for using your balance? The answer is almost nothing. While they charge 10%, 20%, or even 200% per year in interest, you receive an insignificant return on your deposit. And that's not even counting the hidden fees that banks charge without you noticing. Maintenance fees, withdrawal fees, credit card annual fees. All of these slowly drain your money. The result? You work, save, leave your money in the bank thinking it's safe, but it loses value over time. And there's an even bigger problem: inflation. Every year, your money sitting in the bank loses purchasing power. $100 today won't buy the same as $100 10 years ago. And do you know who benefits from this? The banks. Because while your money devalues, they continue lending and profiting. This is a hidden game of money, a game designed to keep you constantly chasing after wealth but never truly achieving it. But now that you understand the problem, let's talk about the solution. If banks use your money to make more money, what would happen if you used the same strategies? Instead of leaving your money sitting idle, you can put it to work for you. And the good news is, this isn't something exclusive to millionaires. I'm going to show you 4 practical ways to start right now. The first is investing in mutual funds. These are pools of assets managed by specialists who distribute the profits among investors. Instead of letting your money sit in a bank account, you can invest in funds that generate much higher returns than savings accounts, while also offering diversification to reduce risks. Another option is investing in REITs, which are real estate investment trusts. Instead of buying an entire property and dealing with bureaucracy, tenants, and maintenance, you can invest in small shares of large developments and receive a portion of the rental income every month. It's like owning a shopping mall, an office building, or a hotel, but without having to manage anything. And the best part? Most of these funds pay monthly dividends, creating a passive income stream. Now, if you want something even more powerful, you need to learn about dividend-paying stocks. Unlike what many people think, investing in the stock market is not just about buying and selling stocks, trying to guess the right time. There are solid companies that share their profits with shareholders, which means you can create passive income just by owning a part of these companies. Major corporations like Coca-Cola, Apple, and Microsoft pay billions of dollars every year to their investors. Imagine receiving automatic payments every month without having to do anything. And here's a mistake you must avoid at all costs: investing in liabilities instead of assets. Most people think that buying a car or a house is an investment, but in reality, these are liabilities that drain money from your pocket. An asset, on the other hand, puts money into your account. This is how the wealthy play the money game. They buy assets that generate income, while most people buy things that only create expenses. Now that you know these strategies, How do you put all of this into practice? The first step is to understand your investor profile and set a clear strategy. If you're just starting out, you can begin small and gradually increase your investments over time. The key is to take the first step. A common mistake is waiting until you have a lot of money to start investing. But the truth is, even with a small amount, you can start building wealth. Another important thing is to avoid falling into traps. The market is full of false promises of getting rich quick, pyramid schemes, and high-risk investments disguised as opportunities. The most common mistake that destroys people's wealth is looking for shortcuts and falling for financial scams. Whenever someone promises absurd returns with no risk, be skeptical. Real investments generate consistent results over time, not overnight. The secret of the wealthy is not just making money, but knowing where to place it to make it grow. Now you have two options. Keep letting the banks profit off your money, or start building your own wealth. The choice is yours. If this content made sense to you, subscribe to the channel and turn on notifications. Because my goal here is to help you escape the rat race and achieve financial freedom. And let me know in the comments, which of these strategies are you going to start using first? I want to hear your opinion. See you in the next video.